Good morning and welcome to end of the week, beginning of the week video here for the overall U.S. market. As of right now, futures are up very well. Yesterday being Memorial Day, there was nothing but looked like algorithmic buying, just constantly pushing the market higher. So let me look at some of these different sectors and what they've actually done. I went over my last video. This one should be quite a bit shorter. So first of all, here is the triple Qs. This is the technology ETF, which is obviously leading the market, is now up and into and closed this gap here from the February sell-off. As you can see right now, it's printing a 234-ish area, which is above last week's high and about in this area. So looks like technology is going to go up, at least test all-time highs. So there's really no bearish argument there other than a technical double top. Fundamentally, looks like I was absolutely correct in saying that technology came back down to investable PE ratios down in this area, and obviously big money was really put to use. So on to the next sector here. This is XLV. This is the healthcare ETF. Again, something else that is up and into this gap. Closing the gap would be right here around 103.5. Right now it's printing 101.20, 101.30, which is not quite above last week's high, but presumably it is going to go ahead and peak above it this week, unless something very, very negative comes out. So onto the communication ETF, which is the third largest sector of the S&P 500, is currently printing 98.70-ish area, which is above last week's high. As I said a couple weeks ago, none of these charts were looking bearish, and so far I'm being proven to be right. So above last week's high of 97.80, which is it's going to open above. I would expect a little bit of a pullback here before rallying back up higher to test $100 even, probably even come up to this recent all-time high. XLY over here, this is the consumer discretionary. This is what contains the largest position is in Amazon. So Amazon, even though they are spending a ton of money on their precautionary measures for COVID, still continues to climb. Buyers are finding value in the name there. Up above 127.20 would take it into this recent gap here, but first and foremost has to get above last week's high, which is 122.07. This one doesn't really trade too much in the after hours, so there's not a whole lot of activity right now. I can only assume that there's going to be a spike above last week's high at the open. So pull this up here, look at the other sectors here. This here is XLF. This is one that I'm heavily invested in right now. And looks like we're moving up very nicely, printing 22.5 roughly, which is above last week's high. For my other videos, I do have an anchored VWAP. I just don't have it on these charts here. But the anchored VWAP is about 2130-ish area, held above it, dipped below it a couple of times, and reclaimed it very, very nicely. So above this, the high of this point here, 2360, strongly believe we'll get up into this gap and start to work our way up over 25, which is going to be very, very nice. Banks are still trading at very, very nice valuations, nice juicy dividends, and there's really, honestly, in my opinion, no reason to sell banks, even with the defaults that will be coming. I think the market has braced for it, and any information that as data comes out, just like with the COVID claim, or not claims, but the COVID positive tests and whatnot, and unemployment, the data that starts to come out will probably be better than what Wall Street is actually speculating on. So anyways, on to XLI. This is industrials. As I work my way down here, these are very small portions of the overall S&P 500. Looks like it's coming up off of a bottom. This one doesn't trade too much in the pre-market, but we can see it's printing in the 65, which is above last week's high. Above this high right here of 66.22 is going to push up into this gap. So none of these sectors look overall bearish in my opinion. They may still roll over, however, it seems like it would be unlikely in my opinion for now. XLP right here, consumer staples. Nice little bit of a bull flag here, holding some Pepsi calls here. Hopefully this this gap up today is going to make them very profitable and it'll be a nice little trade here going into the week. This big bull flag here is about a $12 measure move, which takes it up to above all-time highs. Now I'm not saying it goes there in a straight line, but big broadening pattern here. Didn't quite come all the way down to the bottom, and probably should, in my opinion, test the highs right there. So another sector that is showing at least a bullish pattern and some strength. XLU utilities, which most participants usually buy this for the dividends. Nice quote-unquote safe area to put some money. reclaimed this trend, bounced off of it very, very nicely here 2 weeks ago, and right now it's printing 57, we'll call it 57.30 mid price, which is just at the high of last week. Above this 57.40 area, probably going to start working its way back up to 60. So utilities looking nice. Now these are not sectors that are leading the market, however, but they don't look like they are as weak as they once were. So a lot of sectors coming into play. They're helping to lift the overall S&P 500. Work my way down here to the XLE. This is energy ETF. Um, this is one that doesn't move very often in the extended hours either, but as you can see up here, printing between 39.30 and 39.50, which right at the highs of last week, up and into this gap. Should really not be any reason to sell until at least this gap fill, maybe a soft fill, which just takes out this low of 41.80, excuse me. Probably going to get up to 45s over the next 2 weeks. The real estate ETF right here, very similar to the consumer discretionary in that there is a nice little bull flag right here, something like that. Once it breaks above there, this one has approximately an $11 measured move up to about 41, which takes it up to within striking distance of the recent all-time highs. Again, this is going to be something that actually will be impacted by loans as a default. However, hopefully the banking industry has learned from past mistakes and they're able to make the necessary adjustments in order to help stabilize that industry. Over here onto XME, the mining and metals ETF. Really not much going on after hours or extended hours right now, but again, this is something else that'll probably take out last week's high and fill in this gap. I mean, it was a nice soft fill. Actually closing of the gap would be a move up here to the close of this candle, which is about 21.35 area. Not one of my favorite sectors. It is one of the weakest, much like energy. But it does look like a potential double bottom. So I'd probably kind of come up here at around 25.5, 26 area in the near future. And onto transportation. It looks like a lot of the airlines have caught a bid here pre-market. Maybe they are bouncing for the time being. However, once they do start to roll over, that would be a negative impact to transportation, which would then drag down the overall U.S. market. This one does not move in the after hours much at all, but I can just assume that we're going to be above this 155.80 fairly soon. Probably going to test 160 before finding some significant resistance. Now on to the S&P 500. Do have some calls that I held over the weekend, and thankfully they're going to play out very nicely. I still have this big bear flag that does have a measure move down to around 200 if it starts to play out, but in the near future I'll probably end up taking that off of there since we're currently printing above the 200 SMA, which is at 299.56 currently. We're currently printing at 301, call it 301.40. Now usually how this works when the market is gapping above or up to a key significant technical level, if it's gapped up and it opens right at that level, what I personally do is I sit and wait for 5 minutes to see what happens. If it starts to reject, that means I'm going to look for some downside momentum, possibly to come back down to this gap fill. If it opens up above this 299.5 level, I will buy that as support with a very, very tight stop, call it 299.5, 299.30-ish area, and look for a gap and go kind of play. Because if this does start to go up, I don't see any real significant resistance until about 309, 310 area, which is just the peak of this candle right here, and then up to this high of this previous breakdown range, which was 314. Now the reason I've chosen those levels is on the weekly time frame here. This was a very wide range battle bar as an inside breakdown that occurred after the initial drop from the coronavirus shutdown and whatnot. So the high of that candle, now that we're up and into this range, that's going to be the strongest level that I'm looking at. That's 313.50. There was also a pattern on the daily time frame. I believe it's like an inverted head and shoulders or a cup and handle kind of pattern that does project up to that level. So if we open above, hold above this 200 SMA, I'm going to sit and hold my calls. If we open above and start to break down, I'll reduce some risk and look for somewhere for price action to find support and buy some more calls. If we open below it, most likely I'm just going to close out of the calls that I do currently have, aside from my leaps, that is the 2021 June 350 calls and December 400 calls. I'm going to continue to hold those. But for right now, the market found a tremendous bounce here over the weekend here. Right here is futures. This was the W target. Okay, that's what it was. It projected up to about 3140, 3130 area. That's the 313 level on the SPY. Just a little bit of a double bottom here. These do happen fairly frequently, at least enough to imply that there's an edge in trading them. So that's going to be my overall target here in the near future. Maybe this week, maybe next week, who knows? But we'll see what happens going forward. And right now, the market is still very, very bullish, at least in my opinion. Price action is above the 8, above the 21. It is above the 50 SMA, which is not on my chart for whatever reason. 200 SMA is right here. Holding above there is going to be hugely positive in my opinion. And worst case scenario, if it does start to pull back in, probably find some support, maybe a dip and rip, a little bit of a pullback down here below this 29.78 before rallying back up higher. But we'll see what happens with that going forward. If you have any questions, comments, please feel free to leave them down below. Also, come join us over at the Trade Crew chat room. Should be an exciting week to trade. Have a good week and good luck.